What's going on, guys? Aaron here. Welcome to the video. So there is something very important you need to be aware of, especially if you are trading. I want to talk about that in a moment. But first, a lot of people, or some people, call me a perma-bull. Basically, Aaron, you're always bullish, even if there is bad news. Well, I try to keep a balanced approach here because I do understand that we could be entering a bear market, and I'll talk about that a little bit in this video. But as a lot of you guys know, I got involved in this space in 2013, and then I rode, Bitcoin up from 70 bucks or so to over 1,000, and then down to 178, okay, or 175. So that was really, really brutal. So the reason why I really don't care as much about short-term price action is not because I'm not invested. It's not because I don't realize what's going on. It's just because I've been through a lot. I've been in this space for a while to really know where things are going and understand that volatility is the price that we pay for insane gains. But before I dive into all the stories I want to cover today, I just want to remind you guys that obviously I am not your financial advisor. Crypto moves fast and nothing I say is a guarantee. What I share in this video are just my personal thoughts on the market. Also, some of the links in the description do support the channel if you use them. And lastly, I'll never contact you for investments or anything like that. So over the weekend, we saw a lot of volatility. We basically saw a range of around almost 92K down to 87K. And what that did is it just wiped out a lot of people who were irresponsibly taking leverage. Now, if you are a professional trader and if you do want to play, you can absolutely use my link and check this out. But if you are someone who has no idea what they're doing, I highly recommend not touching leverage. Because it can absolutely wipe people out like we saw over the last 2 days or so. So there's a couple stories I want to talk about. And the first one, I'm not going to play it, it's 3 minutes long, but it is the former SEC Commissioner Paul Atkins saying that the US markets are moving toward on-chain in the next couple years. Why that's a big deal is that the US equity market is $68 trillion or so, says Matt Hugin. And right now we have around $670 million in tokenized stocks. So there is a large way to go from 670 million to 68 trillion. Now, I highly doubt that we're going to tokenize literally everything, but there is room to grow here, especially if we actually begin to tokenize more of the market. So the next story, we got Scott Bessent, and what I forgot to do is actually put this on my chest because this is me being happy. This is me being a bull. This is me being very excited about the future. But when things get worse, or when I talk about what could go wrong, I will take this off. So Scott Bessent thinks that 2026 could be one of the best years the US has seen in decades. Not going to play it, but he gives out his reasons that he thinks so. And I want to find one other quick story for you guys right here. So this is Fidelity's CEO, Abigail Johnson, the CEO of Fidelity. Okay, she talks about Bitcoin. Let's take a look.
I kind of like Bitcoin. I don't own tons of coins, but I own Bitcoin. And I think it will continue to play a role in the savings hierarchy of lots of people. And it is the gold standard, so to speak, in the crypto world, and it's been around, and it's solid, and it's persisted, and it's a good system. So I'm long-term very comfortable, and I think that will continue to be something that we will factor into our thinking and our quest to provide options for our customers. And I'd like to be able to be one of the people that continues to make it a little more accessible, because for all right,
so I'm going to pause it there. I just want to first call out the genius, no pun intended, in the comment section saying she's just saying she likes it because their own Bitcoin ETF makes them a lot of money. Fair, fine. But she also didn't need to say that she publicly owns it. I kind of like Bitcoin. I don't own a lot of coins, but I own Bitcoin. She did not have to say that, okay? She decided to say it. And again, she's the CEO of Fidelity. So someone with quite a lot of power in this space. So still have my happy face on because we are going to continue with some perma-bull news. Harvard now has $443 million of Bitcoin exposure. Okay, That's crazy. Harvard ramped its Bitcoin investment in Q3 of this year from 117 million to 443 million dollars. It also boosted its gold ETF allocation from 102 million to 235. And Matt says, think about that for a second. Harvard decided to put on a debasement trade and it allocated to Bitcoin 2-to-1 over gold. So it increased, or it almost 3x'd its position in Bitcoin, and it just over 2x'd its position in gold. So when I think about investing, I'm thinking about, am I smarter than the investment team at Harvard? Am I smarter than the CEO of Fidelity? And then, again, just zooming out, if you zoom out long enough, you'll realize that volatility is the name of the game. And ultimately, this is what happens, right? Over time, that's what happens. Now, I do recognize, and I have a lot of sympathy for a lot of people because, people in the comment section, maybe you, are saying, well, cool, Aaron, but I have to sell my coins to pay for rent. And I get that, and I understand, and I'm not trying to dismiss that reality for a lot of you guys. But I will say, looking at Bitcoin, which has been around the longest, things tend to go up, right? They go up and to the right over time. So next, I'm going to take off my smiley face. We can see that Bitcoin is going down, or basically had a divergence from the M2 money supply around May. Now, this is pretty unusual because we also saw gold and the NASDAQ continue to follow the M2 money supply going up and to the right. Personally, I just think this is a temporary diversion. Maybe what we're seeing now is just the next 4-year cycle, which would mean that historically we would bottom next October. Yeah, maybe that's it. But ultimately, I do believe that, this is not going to be a divergence forever. Right here, which I think is pretty cool. Whoop, forgot to put this back on. So we got Jack Mallers of 21. His company is going to be trading on the New York Stock Exchange under the ticker XXI, or 21, which is pretty cool. And what's awesome, which I think is pretty amazing, he is going to be moving his 43,500 Bitcoin out of escrow and into custody. And they update their proof of reserves here. And I really like this. It's something that Strategy has not done because they said it would be basically unsafe for them to do so. To basically have all of the 650,000 Bitcoin that Strategy has in an address or wallets that could be publicly viewed. But Jack is like, what exactly is this unnecessary risk that Michael Saylor and Strategy says about this? Bitcoin addresses are public by design. There's nothing a bad actor can do with an address, which is absolutely true. If you're pointing to a specific threat model, spell it out. Basically, what is this risk? And that is something that I got to say I don't love about Strategy here. And I'm not going to, poo-poo on Strategy on this video. But why is it that one company can literally show where they're holding their Bitcoin, and another company that is a little over 10x the size is saying, no, we can't do that? I don't know, right? Nobody's really pressed Saylor on that in a way that's given me an answer that I've actually liked, but let me know if you have one below. And right here, bull markets have lasted 5x longer than bear markets on average. So he's looking at the S&P 500, but it's still really important to remember this. So bull markets up 254% over 5 years. Bear markets are down 31% over 1 year. Markets spend far more time growing wealth than destroying it. And this is why interrupting compound interest, compounding, is the biggest risk of all. Yeah, he's talking about the S&P. You can see here, this is a great chart. Basically, here are the times where the markets and the price has gone up all the way going back to 1949. You can see massive booms with little, very aggressive bear markets. And this is very important. Most likely you guys are also investing in the stock market as well and having some low-cost index funds or whatever you're doing. So this is a good reminder for the stock market. And obviously Bitcoin is so small, right? Bitcoin basically started right around here, 2009 or so, 2008, 2009. So, for Bitcoin, we usually have 1 to 2 years, which are crap, and then an amazing post-halving year, minus 2025, which is part of the frustration, obviously. But yeah, going back to 1949, you can see exactly how it plays out, which is a really good thing to remember, why it's a really good idea in general to stay invested in the market versus trying to time the market. And right here, another bullish story, and then I'll take off my little happy face. So every time the Russell 2000 breaks out, a Bitcoin bull run follows. The Russell 2000, per this chart, has just broken out. So we'll see. It doesn't look like it really broke out, but if it does, that could be a sign. And this is something, let me take this off. This is something that I think is important to remember, that there's always a chart to prove every point. You can look at what happened after quantitative tightening ended, and it's not necessarily the most bullish thing immediately for the price of Bitcoin. You can look at all sorts of charts and metrics to prove whatever you want to prove, okay? So that's why it's really important for you to have your own investment thesis. Why are you buying this stuff? Why are you holding? What is your time frame? And are you willing to stomach the volatility? Because at the end of the day, you can look at charts like this and be like, oh, here it comes. Or again, you could look at charts like this and be like, well, we got another year of going down before we see the bottom for Bitcoin. Whatever you want to look at, right? And there's a million other charts I could show as well. And right here, this is pretty interesting. So Bitcoin bear market on Google Trends, basically how much are people searching this term? It hit its high November 16th to the 22nd. And this is the highest it's been for the last 5 years. The previous peak was when things were very depressing in 2022, June of 2022. That was depressing. That was, when Celsius went bankrupt, when BlockFi and Voyager, all these companies were just tanking. Three Arrows Capital, that was gnarly, right? If you were there, you remember. And a few weeks ago, we saw a higher search term or a higher volume for Bitcoin bear market. Now, for me, this is pretty bullish because, okay, we're seeing that much fear, people searching, is this basically a Bitcoin bear market? That's why somebody would be searching for this term. But look at the price. The price is $90,000 or so, and people are searching more than ever Bitcoin bear market. The last time that search term was that high, Bitcoin was around $30,000 to $40,000, okay? So we are 3x higher, but people are more terrified. To me, that is a good thing because, again, we're putting in higher lows and higher highs. The panic is still here, and take a look right here. The amount of Twitter followers, basically the social interest, is at an all-time low, so retail is gone, but Bitcoin is $90,000, which is, pretty amazing. 4 years ago, if somebody said, hey, we're going to go from 16K to 125, we're going to drop to 90, and people are going to be in an absolute panic, I would be like, that sounds quite good to me. Take a look at YouTube views. We can see that we are still very, very low, 778,000. Back end of 2024, we can see we were at almost 2 million. So less than half of where we were, but the price of Bitcoin is around where it was end of 2024. Okay, so 1 year ago, we are at less than half the interest for YouTube views for these crypto stations. And, Bitcoin is around the same price. Now, I get that altcoins haven't hit the hardest. I'm not overlooking that. I completely understand. But it is very interesting when you look at where sentiment is versus where the price is and comparing that to previous times where things were similar. So guys, I will end the video there. I hope you guys are doing well, and I will keep you guys posted this week with everything going on. Till next time, talk with you soon, and bye for now.